sense.
Joining us again this morning is an Arizona CEO, CPA, and an author who's been with us before, Tom Wheelwright. Nice to have you back on the show.
Nice to be back.
I don't know if we'll get through all of these or not, because there are 9 things here you want to talk about, and tax season is just upon us. So what can we look for? What do we need to know that will impact our returns and our future?
First thing is government shutdown doesn't change the need to file tax returns, okay?
Right.
The IRS. Now, here's the thing, though. Only 12% of IRS workers are working, which means that you're not going to be able to call anybody, right? You're not going to get any questions answered. So I think that's the first thing to remember is the government shutdown. You still have to file your tax return, but you're not going to get any questions answered. So I would say that's number one. Number two is the forms have changed considerably this year. It's not going to look anything like it's looked in the past. You're going to your Schedule A, your itemized deductions. State tax has gone away. Your investment expenses have gone away. Now you've got new child credits. So there's a lot of changes on the forms themselves. And then there are some things that you're going to be able to do. Frankly, if you're a business owner, then there's some elections you need to make. There are some changes you need to make. So it's never before you're going to need really a good tax preparer.
Yeah, if you haven't had a real CPA or tax preparer, this might be the year until you kind of get your arms around it. Let me ask you about miscellaneous deductions. I own a wealth management firm, and for years, I take clients out to dinner, lunch, blah, 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 and I pick up the tab, and then at the end of the year, I just write it off as a business expense, right? We had been told, no more of that, like it's not going to happen. Then I heard you can write up to 50% of those off. So where are we on this?
Okay, so first of all, true business deductions haven't gone away.
Okay,
they're still there. You own a business, you're fine. It's that question was the meals and entertainment, and there was a question whether meals were kind of caught up in that. So no more entertainment, right? You go to a basketball game, a Suns game, you don't get to write off the tickets to the Suns.
Okay,
but you still do get to write off 50% of the meals, just like you always have. Okay, but if you're an investor, and you pay management fees to you. For example, you're managing their money.
Right.
And they pay you fees. Those are no longer deductible.
Yeah, they used to be deductible. They aren't anymore. You're right. Wow. Okay.
So it seems that most of the things you have to watch out for concern you if you are a business owner. What are some of the other things, Tom, we need to think about?
Well, for example, let's say you bought a car last year. Okay, there's bonus depreciation, meaning that the amount of deduction you get for that car. Let's say, for example, you bought an SUV, a big SUV, which is a lot of people are buying right now. That could be up to 100% deductible, even if you didn't put any down payment on it. So you could have bought an $80,000 SUV, $60,000 SUV, and write off practically the whole thing, whatever you use for business. So that's a big change. Real estate, same thing, has big tax benefits if you elect to take them. And one other thing, retailers. So retailers actually get to write off their inventory this year. Most retailers will get to write off their inventory this year. That's a big change nobody's talking about.
Now, we're not one of these real extremely high-tax states here in Arizona, but we know some states have tried to come up with little sneaky things to have you write off part of your taxes as deductions. Is that right, what they're doing now for charity and things like that?
Yeah, some of them work and some of them don't. Okay, so if you can get your employer to take on the burden of your tax liability and then just reduce your pay, that's okay. So like New Jersey has that one, right? But if you're actually doing it as a contribution, like we have credits like that in Arizona, right? We have the credit for the private school tuition,
right?
That's a big credit here. Well, if you take the credit, you don't get the deduction on the federal return. So you get credit or the deduction. You have to choose.
Oh, okay. Well, it's not the worst choice, I guess, in the entire world. Anything else, Tom, that we missed? We got through a lot of this stuff here.
No, we did. And the thing is again, like you said, you've got to have a good tax preparer this year. Because I'll tell you one other thing. You're a small business owner. Your taxes should be reduced by 20% this year because of this 20% pass-through deduction, and it's a little tricky. So make sure that you sit down, explain what your business is, be really careful what your business is, and you may get a 20% write-off just because you own a business.
Very good. Tom Wheelwright, thank you so much for joining us and updating us on this stuff.
Thanks for having me.
All right.